around $37. Going back to this daily chart, and I've mentioned this, quite a few times on the blog, and for people who've contributed to my site, I've done something a little extra to say thank you to them. I have a PayPal link, for people who want to donate, and for them, I've done like a little contributors letter that I send out pretty much every day or a couple times a day even, just letting them know what I'm up to and what I'm thinking about the market. And I'm going to do a couple little videos and stuff, and show them some extra things, you know some stock ideas and just extra little things that I'm looking at. It's just a way to say thank you, because I appreciate that they appreciate what I'm doing, and I know everybody does, and but it's just nice, and I just want to do something extra. But XLU is one of these ones that I've been mentioning quite a bit. It's broken down pretty badly this week, as you can see, pretty much down to that $37 level. This was just a fantastic time to buy puts, and I bought some more puts as this rose up over here, and it's just picture perfect, and I'm gonna I have $40 strike on August 40 is my strike, and I'm gonna exercise them, because I think ultimately I think what is this, goes from 44 to about 37, so you got $7. This is going to $30 ultimately. So XLU has got significant downside still. If I were an investor a little bit longer term, XLU would be definitely high priority in my on my list there. I want to show you money stream. This is a Warden indicator on this, and let's back out a little bit, because this is monstrous. Look at this negative divergence. I mean, that is just horrible. I mean, you see how bad this is? I mean, I don't think I've ever seen a money stream profile that bad since I've been using Telechart. It's truly beautiful. Let's take a look at DBC. This is the commodity index. This is another one that has not been looking too hot lately. Commodities. Okay, so commodities, they have been on a slide, but I'm wondering if maybe they're getting ready to pull off a little bounce. And I'm not suggesting to necessarily play the bounce on the long side, but it may set up a short. I want to show you 3C, I think, on this one. Let's take a look at a 60-minute 3C here. This is what I'm talking about as far as a bounce goes. See how this is a very positive leading divergence. Prices making lower lows, lower lows. This thing is just shooting up, making a very high. In fact, surpassing the highs back here in July. That's a pretty magnificent feat. So I'm impressed by what's going on there with the 3C in that one. So that's something to keep an eye on. And again, we see the same thing. So I think there's going to be a bounce here in commodities. Keep an eye on that. Of course, we're looking for that in oil as well. So it may, just be a thematic thing going on here. So while we're on that subject, the Dow Jones U.S. Steel Index. Oh boy, not to contradict myself. Okay, this looks really bad. It's always good to take a longer term approach to things. So let's take a look at a weekly chart. Weekly chart, you just have to say this is in a downtrend. There's no way you can look at that and not say it's in a downtrend, I don't think. On a daily chart, lower highs, lower lows. Last couple days has shown some pretty aggressive red volume over here. Let's take a look at a 60-minute. There's a slight possibility, 30-minute chart. There's a slight possibility that slight bounce here, because there is kind of a little bit of a wedging type of formation going on over here, although the volume's not really confirming it. So there is a possibility that there's going to be a slight bounce, maybe up to 460, 465, something like that. But if we take a look at a 3C chart, this is going to be really ugly, so I even hesitate to show you. But here's a daily 3C chart. You can just see how this deteriorating situation. Even back in May, it started to show the distribution, and it's just broken down ever since. So that was definitely a top distribution into that top. And here's a 60-minute version of that. Let's take a look. Now on this 60-minute version, again, I saw the possibility of a bounce here, and maybe we're going to see that. But to me, if I zoom in here, what I also see is that it had this possibility for a bounce. Let me get out my marker. See the positive divergence over here. Here's a low. We're making a lower low over here, and 3C is making a higher low. So that's positive divergence. So it had a really good opportunity, and over here it squandered the opportunity. Instead of making a nice higher high over here and surpassing this one, it failed to do that. So that's why I'm a little bit suspicious. And over here, price at this point is higher than prices at this point, right? But the indicator over here is lower than prices at this point. I know this is all, getting a little confusing at this point, but basically what it's saying to me is that I'm suspicious of the steel sector. Certainly I wouldn't want to be in it for the long term. I think the momentum is to the downside, and on the short term I just don't think that there's enough evidence. Maybe there's going to be a bounce, but I don't think there's enough evidence on the bullish side to support going in for a long trade on that. You need to have a lot of probabilities on your side to make that trade work, and I just don't think they're there for the steel trade right now. Here's okay, here's another one, right? So we get, again, this positive divergence here, and again that squandered opportunity over here. Okay, so that's a 60-minute 3C chart. So don't like what I'm seeing there whatsoever. Here's a 15-minute, and what we're seeing on this one, the positive divergence here. Over here we get the squandered opportunity again. Price at this point is much higher than it is over here. Indicator is not higher at all, and again price is higher here than it is over here, and indicator is actually lower over here. So it's just not a very positive looking profile. Let's take a look at one last one here, and this is a daily 3C. Again, you can see basically that top negative divergence on this retest at the highs over here. You can see it real bad there, and basically as soon as that negative divergence was made, this thing just totally fell apart. That's a daily chart.